Every single day I make videos on YouTube going over the NASDAQ, the SPY, and everything in between. And then I go over specific option plays that I'm liking and how exactly I would trade them. But see, today in this video, I'm going to tell you exactly what I look for and exactly how I attack these trades so you can be a better trader and hopefully you learn a thing or two. Let's get to work. Now for the sake of this video, all you're going to really need is TradingView. You can use TOS, you can use whatever you want, but TradingView just for time's sake. Now, again, I want to highlight a few things. Before we jump into equities or how to exactly chart these stocks, I will say one thing is a constant at all points in time. I always am looking at indexes, okay? So if you're trading Forex, then you really don't need to look at indexes that much in comparison. But I will say this. When you're trading stocks, the NASDAQ and the S&P are the number one thing that matter the most. And then you move into charting whatever stock you want to chart. So looking at the NASDAQ here, this is a daily time frame. I know just based on simple market structure that you're clearly making higher highs and higher lows. Therefore, you are in a bull trend. So majority of all my trades should lean towards the upside, or at least if I'm looking to hold a trade longer, they're going to make more money. It's going to make me more money, and it's just a win-win possibility. Also, I will lose less. This is everything that I need when it comes to trading. So again, NASDAQ looks good for looking at that. If it's, looking at a downtrend, again, I can take you back to 2022. A lot of my trades favored the downside because we were in a downtrend. Lower highs, lower lows. We pushed below the 200 daily moving average. It was like a perfect storm. But anyways, so that's how you identify what's happening there with the structure and the trend. Now, a lot of what I talk about, I'm going to be going over pretty fast. So if you need to, go back over it or ask questions down below. But this is the biggest thing that I think people get slipped up on, is can they focus on two things essentially? Can you understand what the indexes are doing, the NASDAQ and the S&P? And then can you understand that your equity is going to follow what that is doing? And I always say one key rule: you want to go long on the strong stocks and you want to go short on the weak stocks. That's a very good rule of thumb. Meaning, if you're at the bottom of a range, you don't really necessarily want to hype up and go super long. You want to wait till you get confirmation. Also, too, if we're moving in a clear uptrend, I don't want to go long on the weakest stock. I'd rather long a name that's already running. Remember, you're day trading. You're not long-term investing. There's a difference. Okay, so now what we're going to do is jump into a stock. Now, for me personally, I recommend this to basically everybody. If I'm a beginner day trader, I always say Apple, Apple, Apple. Okay, it's the bread and butter. It's the apple of my eye. That's a good one, right? Okay, but also too, this is what I recommend for everyone. Pick out 3 names that you like, focus on those. Live it, breathe it. That's all you're going to do, right? So let's just say Apple, Nvidia, Meta for right now, the top 3 right here on our list. Let's go to full screen. So what we do is you start from a top-down approach. We find our overall key levels, and this is really, really easy to do. So what I'm going to mark out here is what I've been watching for the past few days. This level right here was your previous all-time high here on NASDAQ. Basically, 183 is about that level right there. You can really come back and see. And this was back in 2022. Now, we've had a lot of back and forth here. We've had a potential double top kind of play out here on Apple. You could argue that it's trying to play out, but again, you did not break the neckline necessarily. You broke it, then got right back above. Or actually, no, you didn't. So you held that neckline there, and then you're holding still above the 200 SMA. So what do we know here? Apple is still in a bullish trend. And what do we also know? The NASDAQ is clearly in a bullish trend. So what we do is we jump back down to the 15 and the 5. Now, a lot of my day trades, I operate in the 5, but I go and work my way down to the 5 minute. Meaning this. So I'll start like at the 15, and then I'll work my way from there. So a few things I do know if you've watched any of my videos, or you should know as well. The 200 daily SMA is probably one of your best indicators for understanding when you're bouncing, overall strength of a trend, and things in between there. So what we had here over the past basically 3 weeks, you bounced once, you've bounced twice at the 200 daily moving average. That is all that is. And you're bouncing there. When you get below this, structurally, you become pretty weak. But Apple's been bouncing. So what we wanted to see here, and you potentially almost had a double bottom here as well, which no one was really talking about. So you can see a 1-2 touch at that level. And so what happens is you break back above this little like neckline right there at 187 roughly. But the big thing that we were really looking for here was 2 things. Now, number 1, if you want to trade the double bottom, then you hit the mount of that level. And this is where everything ties in together. So we have 2 levels that we're watching. Our previous high right here, 183. We zoom back in. We're getting back above that level. But then to really get the breakout point, so 1, if you get above 183, you can try to trade this back to the gap fill or possibly even back to that double top. But when you want to really get bullish to where you can trade the gap fill up here and start pushing back into all-time highs with the rest of the market, you got to mount this level right here, 187. Why? So what this entails us is that this is the confirmation of a double bottom. And this goes with any indicator, head and shoulders, bull flags, ascending triangles, whatever it may be. This will teach you and really break down everything for you. So what you have to see is this right here. You have to see the break, the retest, and continuation. And that is what it really comes down to. Now, a lot of people ask me, Tyler, what time frame does this have to be on? Is it the 5 minute, the 15, the 1 hour? What is perfect? Now, there is no perfect one size fits all, and sometimes trades will fail. Sometimes you will get the bounce and then you'll come straight back down, right? It's going to happen. It's all about putting yourself in the right situation and hopefully in the best situation to win and not lose. That's why it always comes back down to making sure making sure the indexes are moving with us in that specific direction. So if we know the indexes are breaking to the upside and Apple's also trying to mount, then we probably know this is a decent opportunity when it comes to the trade. Okay, so let me slow down. I might have confused anybody. And if you are confused, comment down below and I'll try to break that down and kind of try to simplify it. I also go live quite a bit. So if you're looking at this pattern, looking at what's taking place here, a lot of people are like, I like double bottoms, I like head and shoulders, I like this, I like that. But what you do is you jump in them prematurely. You jump in them before the entry opportunity is truly there. It's only there once you get the break and the retest of that key level, the BRB, the bump and run, whatever you want to call it. That is ultimately the foundation of majority of my trading. Now, I have supply and demand levels, I have key levels, I have the 9 EMA, I have the VWAP. These all help me. But at the end of the day, you got to break and you got to retest. Even if it's not the trend line, you have to break and retest the VWAP. You got to break and retest the 9 EMA. You got to break and retest the 200 SMA. It all aligns with this thesis. If I'm just going long on the initial break, there's a high possibility that I will end up getting trapped. Because what it all comes down to is the strength of that reaction and that retest. The reaction 9 out of 10 times will tell you how the trade is going to go before you even get $1 away from where you're at. So just for a little bit more clarity, okay, so let me answer the question of what time frame, Tyler, what time frame should I be using? Now, a lot of my trading revolves around the 5 minute. And so when I'm using the 5 minute, this is what I'm going to tell you right now. Few things here. I love using the 9 EMA and I love using VWAP. These are going to be your best friends, your bread and butter. You're going to use them every single day till the day you die or stop trading. Now, getting away with the VWAP tells you a lot of things. Intraday, when you're mounting above the VWAP, you really want to let this run for like 30 minutes at least. But again, after those 30 minutes pass, then you have enough data to actually use the VWAP. Now, as long as you're trading above this, you're typically very bullish. For instance, I look at Apple here, you're trading above it for basically two days there. Fantastic, very bullish, continuing up, and you weren't even really close. Now, some stocks you might grind on the VWAP. Now, I can use an example like sometimes NVIDIA here, where you get above and you come to VWAP and you bounce, and you bounce, and you bounce. The stock's inherently strong. You're just not getting a lot of buyers there. And anytime you have an opportunity, buyers do step in just kind of gradually, and that's how you use the VWAP. So going back over to Apple, what we're looking at here is when you're doing this, you want to see the 9 EMA. Now, if you haven't watched the 9 EMA, the video is somewhere down below or on the channel, so make sure you check it out. It's a scalping cheat code. That's the hint of the name of the video. So you get above the 5 minute 9 EMA and you just grind to the upside over and over and over and over, right? So that's what you're looking at there. These will help you to initially get those entries. But to answer the question of what time frame, there's no perfect answer. Obviously, higher time frames give you the best confirmation, meaning if we get a mount on the daily time frame, right? That's a great, it's perfect, right? It's actually pretty awesome, right? So if I go back here and I look at what's happening in the daily 200 right here, 1 touch, 2 touch, both on the daily, and you're bouncing back up. Now, if I go and look at something like Tesla, where it's like, hey, let's buy Tesla, it's really cheap. Tesla's mounting below major key levels, the 200 weekly moving average. And what do we know? The daily time frame is one of the best areas for confirmation of it being bullish or bearish. Maybe I shouldn't go long on Tesla and I should focus more of my efforts on the stock that's bouncing at its 200 and still has room back in all-time highs. Might be a good idea. So that's how I'm viewing this. Now, obviously, when you're scalping and day trading, you only have so much time. So the 5 minutes where I spend most of my time. And if I get one candle maybe below this level, it could be a trap. It could be something along those lines. That's why I like to use the 15 combined with the 5 to get a better answer. Also looking at what's happening with those said indexes as well. So you the 15-minute clearly come down, break, hold, push back up, engulfing candle. That would have been a great long signal as well near 188, and you could row this up $3. Again, not only are you reclaiming that key level, you're reclaiming the VWAP, and you're reclaiming the 9 EMA. So again, there's no one size fits all. I'm sorry, it's just not that easy. Now, faster, quicker names such as like AVGO. This is a little, actually we'll do Meta, right? So Meta, this is a really good example. We've had a lot of good trades. We've mentioned this a lot on the YouTube channel, right? right? The hold of 362, awesome. You need to break above 377, awesome. You break 377, you're running to all-time highs. Well, this is where things get really interesting. So Meta, if you look in the 15-minute, you've had multiple tests of this key level down here, right? Over and over. Specifically, the 15 minutes where you're holding it, right? So you've had a lot of entry opportunities. But right here, you didn't necessarily get one, right? On the previous highs. It just didn't really happen. So you're just grinding to the upside. And so you're just not going to get that opportunity. So you have to be on the 5-minute and you have to be watching any type of retest you'll get. And sometimes the only retest you're going to get is to the VWAP. Because again, what does VWAP tell us? It tells us the underlying trend of the day. And the VWAP is the number one place that big buyers load back into stocks or load into equities. Meaning what? So let's say hypothetically your stock is moving the way this is right here, right? Well, buyers aren't going to want to get in, specifically hedge funds or big money, until they get triggered near that VWAP. They push back up, less buying occurs, you come back down, more buying occurs. You go back up, less buying occurs, go back down, more buying occurs. And you're not going to really see big loads of money hold you at a key level. They're just going to gradually get in, and you're just going to trend until news comes out. And then again, buyers will step in and defend that area if you come back towards that said VWAP. That's how I view it. That's how I use it. And you'll learn that this kind of works out pretty great. Now, when you have indecision like this is when things can get tricky, or you might just see indexes getting a quick sell-off. So again, it's very important that we always know exactly where indexes are. So even though that sell-off occurred earlier in the day, look what happened on the indexes. You were holding that VWAP, you came down, but guess where you bounced? Right off of your key level. Where does this key level stem from? It's your previous all-time high right here, December 27th, 2023, or just your previous high there. And guess what happens? You mount that level and then you continue to run. So again, it all comes back down to mounting all these levels. And it's not just looking at one stock, but it's understanding the way that this all works. And it works on a little bit of a hierarchy, right? So let me just draw it out for you. You have your stock that you're interested in. But before you can enter that stock, you have to look at your underlying index, okay? And then from there, you move back into your stock or your option, and then you figure out the play you want to do there. And this is how it works back and forth. Then you go to a new stock, and you have to go back to the index, and then you go back to the option, then a new stock, and it's just back and forth, over and over and over. And that's all it takes, and that's all that I'm doing all day long.